We're looking at S&P 500 M&A futures, the ES, time frame is 2000 tick chart, and in this video I'm going to be sharing with you my live trading session. The first thing I have to do is I will need to identify the overall market structure. I can see that the structure is fairly range-like with bearish tilt. We have big move down, big move up. We're trading lower again, but you can see that every single major high is lower than the previous one. So this is showing me that there is slight bearish tilt, but as of right now, all channels played out. The market is going to open in 2 minutes, and I'm looking for why the downtrend after market opens, because there is a bearish bias. So now that I'm observing the why the downtrend is getting confirmed, is I want to see high probability setup pull back to the key entry point, either the EMA or this trend line right here. Preferably two-legged pullback, second entry short. So I'm going to be monitoring the correction, how strong it's going to be. Right now we just have new low, first entry short. So I'm going to reset the count at each new low, and I'm going to look if there's going to be the high probability setup pullback very soon. Resuming the video, as we have visual two-legged pullback, but I have micro double bottom which resets the count. So I'm treating this as a first entry short only. Had it formed right after main trend line, I would be considering even the visual two-legged pullback, but we are breaking the downtrend, and trend line rules say that we need to get new extreme because the market is not going to reverse just yet. All the sellers playing the wider downtrend still expect full price action to create the new extreme. So I'm withdrawing the uptrend micro double bottom count reset, and I'm looking if we're going to push below EMA and get some nice confirmation setup. Right here, so I'm resuming the video as I'm going to take a failed second entry long once it triggers, because the downtrend needs to get new extreme. We're below EMA, EMA keeps rejecting. We got filled, so I'm going to place my stop loss 1 tick above the signal bar. I'm going to go for 8 tick target profit. I expect for price action to create new low for the downtrend. The uptrend doesn't have fully new high, so it's a little bit risky, but I'm taking a chance. The stop is not that big, it is 1-to-1. So I like the failed second entry long below EMA. If I get stopped, then that's okay. I still expect for price action to create new low. The bulls are getting rejected by the EMA, and let's see if we can get the scalp here. So we got stopped on our failed second entry long, but I still keep my bias bearish, and I still expect for price action to create new extreme. So I'm still looking for good setup to sell, but if I get some lower high breakout pullback, I will definitely consider this, because this could have been just a little fake out. Right here, so I'm resuming the video as I'm going to take a second entry short, bounce off the resistance, because I believe we're going to trap the bulls. Alright here, so we got filled. I took a second entry short off resistance of this trend range. As you can see, I'm going for 8 tick target profit, and I'm putting my stop loss 1 tick above the signal bar. I expect for price action to create a new extreme. I feel this was just a little fake out, little consolidation. So we have new low, first entry short, pullback, second entry short. We're bouncing on my exit order, but we need to tick through. You can see the resistance is coming into play. The sellers are still expecting new low. We just took a little bit long time. This was because of the overshoot. Overshoot can generate strong momentum in opposite direction. So this is why it took a little bit longer for the bulls to get trapped, because the buyers still expect new high of this uptrend, and they all are going to get trapped. And once they are all going to get trapped and we got filled, they're going to be forced to exit out of their positions. The runner would be over 10 points, so that would be good. We can get the runner, but looks like prices may come back, and we got stopped. But it was good enough for a scalp, and this was our second trade for the day. So right now we're back to square one, 1-to-1. Resuming the video as I'm eyeing double bar entry for lower high, but the signal bar was bullish. So what I need to see, I want to see break below this bearish bar, and then I'm going to drop deep limit order because the risk to reward ratio is quite big. Yeah, it will be 4 points. So if we're going to get a break below this bar, I'm going to drop my limit order like 4 ticks back and see if we can pull back. But I'm watching this as a breakout pullback out of this congestion. I really like the context. I really like the bearish bias here. I still expect new low. I'm going to place my stop loss 1 tick above the single bar. I'm going to go for 8 ticks. Actually, I'm going to go for 10 because this is a riskier trade. So this is a breakout pullback. The EMA keeps rejecting. The resistance that acts as a support is rejecting now as well. The sellers still want to see new low. The context still remains the same. And I'm just selling high. Come on. You guys can see I'm trying to make the 1-to-1 risk to reward ratio. So I'm going for 10 ticks here because I really expect for price action to follow the rules and to reach the new extreme. Okay, we are halfway through and we tick through. So I'm gonna tighten the stop loss to break even, because anything I make right now is just a bonus. It's just a gravy. Our main 6 contracts, they got the scalp. I'm leaving one contract as a runner in case market does something unexpected. In this case, I still expect new low. So we start with a failed second entry long. We expect new low. It stalled a little bit. It was just a little fake out. Nothing you can do. You can't predict it. Just shake it off because it stopped you out by a couple ticks and then continues working lower. Then there was a nice bullish trap, second entry short. And there is nice breakout pullback. Why am I not fading the breakout? Most breakouts of trailing ranges fail. Why am I not fading this? Because the trend is down. Okay, and when the trend is down, I'm looking for breakout pullback pattern to sell, to trap all the bulls trying to fade the breakout. Okay, you still follow the main downtrend, you still follow the price action rules. If I'm going to zoom back, I can see the overall structure is still overwhelmingly bearish, so nothing for me to overcomplicate. Hopefully we will get some nice runner here. So right now what I'm going to do, if I'm going to get a swing high, if we're going to get a break higher and then continue lower, I will trail it down. I will not be too greedy because I don't want to risk market to go all the way back. If I'm going to keep it at this position, it would give us something around 13 points, which is decent. All right, so what I'm going to do, I'm going to place my stop loss one tick above the signal bar. In this case, I'm going to lock in 5.5 points worth of a runner. And if you break lower, then I'm just going to keep adjusting it, keep trailing the stop loss. The problem is I don't want to get too greedy. This is significant portion down and it would really give us some profits. I'm locking in partial profits, so I'm not going out of the market without anything, and at the same time I'm still open to acquiring more and more if we keep pushing lower. So if we keep pushing lower, we're gonna get another swing. I'm just gonna trail it again, but we already reached new low, so I have to take this into consideration. This low is lower than the previous one, and this is important. We may expect stronger correction, so even though I may be right on the overall stronger bearish bias, I just may not time it perfectly. We may have stronger correction and then just slowly but surely work lower. For this reason, I'm taking some profits here. Okay, our runner just got hit. You can see prices keep working lower slowly but surely. What I can see, I have one massive leg down. If I'm just going to copy it and try to find measured move for this leg, it will get me all the way down to here. We are still far away from it, so I don't think we're going to reach it anytime soon, but this is a potential target that I'm looking for. Still bearish, so I'm going to wrap it up. This was a quick little session for me. One losing trade. We made it all back on this second entry short, so we were 1-to-1. And then we made some nice profits on this one. 10 tick target profit. So we made a little bit more with additional runner. If I'm going to zoom out, I can see that every single major high is lower than the previous one. This is giving you overall bearish bias. For this reason, as price action keeps breaking below EMA, you're not even thinking about buying because there is strong bearish presence in the market. So after price action continue working lower, this is a sign that there is a wider channel being present. The first one played out with the break new low. I marked more aggressive failed second entry long, but to be honest, I would be patient here. It is quite stacked even in the middle of these bars. You're selling quite close to these lows, but this is a failed second entry long since the bias is bearish. Decent setup, but this downtrend just had to break a new extreme, so you can't really trust the wider downtrend just yet. If you're more advanced trader, you may have it at the time, but overall it is a little bit stacked. But after downtrend continue working lower, this is where you have to start thinking bearish. You have to trust the bigger downtrend. Your goal is to look for high probability setup at the EMA, at the key entry point. We have uptrend working higher, break new high. We have a second entry short, but it pushed above EMA as a doji bar and you never pushed below, so you're waiting for a lower high confirmation of the second entry short, which never got the trigger. Meanwhile, the congestion formed. Price session pushed above EMA, offering failed breakout. Why this is a failed breakout? Most breakouts of trailing ranges will fail if you have large two-legged pullback. The signal bar on my chart is not that great, and unfortunately there was no lower high confirmation setup. Market continued to correct at the time I was watching the support of the trailing range like this, and notice EMA is flattening and price action is forming consistent price swings up and down. So this means the structure is getting sideways, forming a small trailing range, while this downtrend going to trend line rules needs to get new extreme. So you're not thinking about buying. In fact, you're thinking about selling. There's a second entry short, small bar, 1 point big of a bar. Now it worked for a scalp, but I want to talk about this. You don't necessarily want to take it because notice how steep this bullish leg looks. You can easily make a case for the channel to be a little bit wider. So you want to see broad two legs, kind of like a separate from one another. So this is a little bit too aggressive. You want to see stronger correction. Now you have visual, clear broad two legs. Failed breakout because we were in a trailing range. Most breakouts will fail, and you're fading the breakout with the direction of the main trend. Strong push below EMA and a lower high that is right off the resistance, right off the EMA. So 2 key entry points, and the lower high is confirming what? The failed breakout. While the sellers need to expect the new extreme. So the goal is let the correction play out and then continue selling. After prices reach new low, what do we expect? We expect the market to enter a brand new market cycle. Okay, notice here are the two measured moves, two measured legs, and you can see exactly to the tick, once it reached the measured move, around this area, the market corrected. So it is important to have an idea how market works, what are the targets. I wouldn't be looking to go long because once the downtrend is so strong, there can be multiple pushes to an extreme, so you don't want to be focusing on buying anytime soon. You will need to see some strong proven uptrend in opposite direction to know that the market is reversing, because right now you're still inside of this consolidation. We have a second entry long, but because we traded down the entire day, I would not be focusing on buying. I would need a high low confirmation setup, but because this was also felt second entry short, I'm willing to mark it if you took it, because we can see two bird legs down, breaking new low of two key entry points. It didn't trigger at first, so you would have to enter on the second bar. It's not a bad setup to take a chance. You have to remember, when the trend down is this strong, you should really be focusing on multiple continuations to the downside. You would need to see some proven uptrend getting out of this trend range, okay? The way you know that the uptrend is proven, you see push above the trend range, the key level holding, and uptrend continuing higher. After that point, you can start buying. Here, you're still inside of the trend range that is bearish, felt breakout, bad bars. You're expecting the same thing as here, some lower high confirmation, which you get here, but the single bar had bullish body. So you can see the repeat pattern, what happened here is happening here again, but this time you have uglier bars. And then I didn't see really any good setup, just flat EMA, so many dojis, so many stims, no clean easy setup to take, and market continues working lower, which is very typical if the trend down is this strong. So I hope you had a good trading day and good luck with your trading.